This is Jojo Lawnmower, man, and today we're gonna have another exciting adventures in the stock market. My journey from to the stock market. But here, as you can see, my portfolio it went down $40, but I'm still ahead by let's see, $10.55. Actually, it went down lower than that, but then it's starting to go back up again. What it is the EV stocks such as Tesla, Neo, and they're having a let's see, Tesla, Neo are raising capital right now, and it's putting downward pressure on the stock, and it's going down. That's what it's doing right now. And I invested a lot in Neo and Tesla. Most of my like maybe 40% is with Neo and Tesla. So yep. So that's what's going on right now. You can see everything's in the red. So yep, stuff is going down. But what I'd like to talk to you about is first of all, um, this video right here is for entertainment purposes only. I am not a professional stock trader, day trader, or anything else in that matter. I am not a professional. I am not educated, and I cannot make. I am not licensed to give out professional advice. So yeah. So this here is for entertainment purposes only. So if you take my advice, you could lose everything you own and all that stuff. But anyway, we're down at 1060, and what I'd like to talk to you about is the apps I'm dealing with, the brokerage firms I'm dealing with. I got two of them. I deal with Robinhood and Webull. They're the apps or IPO apps that you you open up a bank account with them. You link your bank account with them, and then you can put money in their accounts and start trading or buying stocks or whatever. My advice to you, is open up a separate bank account where you can lock in Robinhood or Webull, and they can do that won't take. So just have one account fully for dealing in stocks, and that's what I'm thinking about doing. But anyway, the pros and cons of Robinhood and Webull. I like them both. They're pretty cool. Robinhood is the Robinhood app is a lot easier to maneuver, to go around, maneuver and put money in and buy and sell stocks. Also, with Robinhood, you can buy a fractional share. Like I invested in Amazon and I got $1 in Amazon. The stock it costs over $3,000 a share. So an average person can't afford $3,000 to buy one share of stock. So with Robinhood, you can buy a portion of that, and it goes up and down to the fraction you bought. So I found that really good with Robinhood. Another good thing with Robinhood is it's even easy to maneuver and stuff like that. Now, with Webull, what I like about Webull is their promotions are a lot more enticing to join their program than with Robinhood. Like with Robinhood, if you join, with my link, you'll get one free share of stock. But with Webull, they'll give you right now. I think it's four free shares of stock that they're having a promotion on. So um, yeah, so it's more attractive to get into. One downside with Webull is you have to buy a full share of stock. You can't buy a fraction. So if you want to buy one share of Amazon, you got to come up with $3,100 to buy one share of Amazon. So that's one thing to consider. One thing I really like about Webull is you can call Webull if you have a question or a problem or concern, which in Robinhood, everything's online. If you have a problem or question with Robinhood, you have to go to the email or to their app or to their I think they might have Messenger or something. I'm not sure, but you can't get on the phone with them like Webull. You can go on the phone and talk to them and you know solve all the issues and stuff like that. Which I probably think about doing with Webull because I really don't know how to use their app. That's what downside with Webull is. It's hard to navigate and maneuver and buy and sell shares of stock for me. It's harder to maneuver than with Robinhood. So each app has its goods and its bad. One thing I like about both of them is they do not charge a commission if you want to, use their app. Like before, back when I was a kid or when I was young, um, if you want to get into stocks and all that, you have to go to an actual brokerage firm, talk to the gentleman, and the broker will receive a commission from every time, to get into buying and selling shares of stock, and they'll get a commission every time they move your stock. Like if you want to sell and buy another stock, you have to pay them a fee for it. But now in 2020, you don't have to do that anymore. These apps, you can buy, sell stocks all day long, and you don't have to. They're not going to charge you a commission. So that's one thing I really like about, if I knew this, or if this happened when I was like in my 20s, you better believe I'd be invested in stocks instead of wait until I'm old. But anyway, here's my journey. I'm let's see. It was 11111. Now it went down about $40, but I'm still ahead $10. So if you think I'm going to get rich in the stock game, look at this graph and look what color it is. It is red. It is red, ladies and gentlemen. So this is another reason why you do not take advice from the lawnmower man. Because see, it's red. See that line right there? This line right here, once it shoots up to that line, it's going to be green. Yeah, then it becomes green because it's on the profit side. But right now, it's in the loss. It's way below this line right here. So, yep. Always when you invest in stocks or think about investing, first of all, do your own due diligence and do your own due diligence. Do some research on the stock. Make sure that it's what you want to do. Make sure that it's a strong, firm, solid company that you're investing in. That's what I'd do. I'd invest in some like AT&T's, IBM's, Microsoft, T-Mobile, Tesla, um, Exxon. I invest. These are strong, sturdy stocks that's been around for a while. You can invest in some penny stocks. I mean, you invest a stock that's $1 and it goes up to $100. You just made a killing if you spend $100 in the stock. But it's always a risk too because they're the most risk of going bankrupt. So that's something to take in mind. That you can invest a little bit of your portfolio in the penny stocks, like maybe 5 or 10%, but invest your main investments in solid, firm companies that's not going to go bankrupt tomorrow. Like Amazon's not going to go bankrupt tomorrow, or IBM or AT&T or like that. I mean, they're going to last a while. You know them; they've been around for years. So that's what you do. Oh, I just hope the video doesn't run out again. I had to clear out a lot of my phone because it take too much space and the video kept on going. So anyway, this is my third attempt in doing this video. So here's my journey. Oh, it went up another dollar, ladies and gentlemen. Went up another dollar. Look at that. It's going up, ladies and gentlemen. Going up. I could be an auctioneer. And it's 54, 54, 54, 54, 54. Oh, now down 30, 30, 30, 30. Go up, go, 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 go. Okay. Sorry. Okay. Well, I'm going to go out there and pay some bills without using that. But, yep. Yeah. So, this is Joe Lovo, man. Let me know if you like this installment of my stock venture. I'm $11.33 to the good, so we should see what happens. And you guys take it easy now. If you have any advice, let me know. Also, in the next video, I'm gonna maybe give you a couple of my favorite stock people that I look at. Like, there's a lot of stock people who have YouTube channels, and they got really good YouTube channels, and they are they're into the game for a while. They're financially educated. They all had they're really good if you want to take some advice. So in the next video, I'll mention some of the people that I watch and get financial advice for. And YouTube is great to have a lot of different. You can learn a lot from YouTube. So this is, and what you learn from me is how not to have a YouTube channel. Yep, I work hard in doing that for you all. Okay, this is Joe Lovo, man. You guys have a great day, and hopefully I look forward to the next installment of my stock journey. You guys have a good day now. Bye. You like my hair?